Good evening, everybody, and welcome to tonight's webinar. My name is Jono Frankle, and I will be tonight taking you through a few different concepts, a few different principles that are going to give you the ideas about how you can create wealth through different property strategies. And I'm really excited to be able to take you guys through the different strategies and the different concepts and show you some real life deals that are currently happening. Before I do go any further, one of the things I do really enjoy about these webinars is trying to get some interaction from you guys that are tuning in and having a watch. So the cool thing is, the way that we are set up is I do actually have the comments just over here on the screen, so I am able to see any comments that come through, and it is always nice, like I said before, to be able to see those comments come through. So we're going to start off with a very simple question. Make sure you introduce yourself, say hello, and nice easy question. I always ask this one: where are you actually joining us from today? So where in Aussie, New Zealand, Singapore, the world are you joining us from today? It's always nice to hear that. So please drop that in the chat. So like I said before, today is a really exciting webinar where I'm going to be able to take you guys through the different strategies, different concepts that are going to show you how wealth can be built through property. I'm going to show you high cash flowing strategies. I'm going to show you high capital strategies. I'm also going to show you high equity strategies, depending on what sort of result or what sort of goal you're looking to achieve through your property investment. Again, make sure you get those fingers typing so I can see those comments coming through. I want to make sure that you guys are tuning in and got those fingers going. We actually, there we go, they're starting to come through. Brilliant from Wellington. Thank you very much for tuning in. Brilliant. So good to have you joining us. We have one of our amazing team members, Carol, who usually is the queen of typing. She actually has another call tonight, so you guys are going to have to pick up the slack where Carol usually comes in and types away like crazy. Kat, brilliant. Great to have you guys joining us today. Phil, brilliant. Therese, Melissa, brilliant. So nice to have you guys joining us. And like I said, great to have you for tonight's webinar. Let me take you guys through a little bit about what we are going to be covering off tonight. So the first thing that I'm going to be talking about is a principle called the SAD principle, SAD. Now, SAD is in pretty much this principle is going to give you hopefully the complete opposite of SAD. It's about creating positive situation, basically looking at how you can create great cash flow, great equity, great capital, depending on what your goals are. So this really relates back to your goals. I'm going to take you through that exactly. And then the strategies that are going to work for you, depending on what sort of goals you're working towards, what sort of, I guess, what that end figure or end number looks like for you guys in terms of your goals. As well as that, I'm going to be taking you through some real life examples. I'm going to be showing you how students are investing on international markets. So not just investing within New Zealand, investing in Australia and many, many more countries. Make sure you tune in towards the later on end of the webinar where I'll be taking you through some of those other deals. As well as that, we're going to be showing you how you continue your growth and continue to become the best version of yourself as a property investor. Before I do go any further, I need to do a little bit of introduction of myself and who I am. So first and foremost, for me, everything is about my family. It really is the reason that I got into property. It's the reason that I do everything within my life. Family is certainly a massive value for me. My first bit of trivia for you, my first investment property was actually on a reality TV show, which is pretty random, but certainly gave me the idea of, well, property could be a space that can change your life, compared to being a tennis coach for many years before jumping into the property game. I found the team at Wealth Mentor just over 6 years, actually probably coming up 7 years now, and it's been a hell of a journey becoming a part of the Wealth Mentor team, becoming a pretty experienced investor, been trading, been buy and hold space, as well as that mentored a lot of students to be able to achieve some crazy things, which has been a huge benefit, and absolutely love the ability to be able to teach people. Then my journey took a little bit of a turn. So the company that I ended up getting educated from in terms of property, I quite like what the company did. So then that led me to going, well, I want to take over this company. So I've ended up buying Wealth Mentor a couple of years ago, well, through the height of the transition to a digital position, well, hence been here sitting you in front on your computer screens. But it gives me great joy because the company did so much for my life. the ability to take that education and be able to apply it to real life investing really changed the way that my whole investing outlook looked. And really then the passion that I'm able to bring in being able to own this business and being able to then create the ability for so many more people to create that financial freedom or that goal that they're looking to is a huge, huge honor for me. As well as that, last of all, massive sports fan, all about sport for me in terms of whether it's playing, like I said before, tennis coach for many years, really enjoy my cricket, really enjoy my golf, and tennis as well, like I mentioned before, and fly fishing is another real passion of mine. So anyway, that's enough about me. A little bit more about Wealth Mentor. And again, keep those comments coming through. If anything resonates with what I've talked about, please drop it in the chat. Like I said, it's always nice to see those comments coming through. So that there is a picture of our headquarters here in Auckland. We are based in Parnell, which is a pretty cool old villa that we've got there, nicely refurbished. And Wealth Mentor has been going for, well over a decade now. We've had trainers throughout New Zealand, throughout Australia, and we're very fortunate to have many, many media appearances in terms of how much we've changed people's lives. There's a lot of articles there in terms of the Property Investor magazine. You can see many of our students have gone out there and achieved some really cool things. But I want you to pay special attention to one thing, and that there is the tagline that we've attached to Wealth Mentor. And this is something that I brought to the company because I truly believe that we have the ability to make wealth accessible to everybody. Now, when I mention the word wealth, every one of you is going to be thinking of wealth slightly differently. Every one of you is going to think of wealth in a slightly different aspect. So in terms of that, my question to you is, what does wealth actually mean to you? Because, you know, for some people it is like you see on that picture right there, it is about the nice cars, the watches, it's about the expensive holidays. But really, what does wealth mean to you? Because everybody has a different concept of wealth. And I'll take this moment to actually share what I believe wealth is to me. Again, family is a big part of it. There's a photo there with my wife, Karen, who's a big part of the journey for me. And my kids, like I mentioned before, but also my parents, because I think the values that are installed within family create how you have an outlook on your life. My parents made a massive sacrifice when they moved to New Zealand from South Africa many years ago. Luckily, that accent of mine is slightly disintegrated. And actually, on that note, if you have, I'd love to as well hear. So, of you that are listening in today, how many of you not actually born in New Zealand or Australia? Always find that really fascinating. Drop it in the comments as well. That would be really, really cool. But like I said, born in South Africa, and the massive sacrifice that my parents made in order to give a better life for me and my sister, I think has really resonated. Because for me now, it's all about the fact that we can create the better life for our kids. And I think that's something that when you install and you have that big why and the big reason why you're trying to achieve, it really does drive you to get out there and try and create the best life possible for you and your family. The last photo I just want to pay attention to is the one in the top right-hand corner there. That there is actually at our studio in Parnell in Auckland. Usually we do come to you guys from the studio, but for this webinar, coming to you from home, where we are presenting today's webinar. But that is our studio where we present a lot of the events that we have, and we have a really great setup there for the events. Right, I think it's time to rip into it. Awesome. Thanks. Bolam, I don't have a first name there, but first generation Kiwi. So that whole question about anybody not from New Zealand has ended up with one person telling me they're from New Zealand. So brilliant. Thanks for dropping in the chat. I do really appreciate that. It's really cool. So like I mentioned before, I would be touching on the concept of the SAD principle. And the SAD principle really is the ability to change from the way that you have an outlook on property. Because at the end of the day, whenever you go into invest in property or invest in anything, you need to first of all understand what it is that you're looking to achieve. Because the goal is going to determine how you go through the process to achieving that goal. Because so often when you find people that want to invest in property, they buy something that they feel comfortable buying. How often do you hear about people that have either acquired an investment property because either they've had a property, then they've ended up their own home and they've upgraded and they've kept that as a rental, Or you've found a situation where, well, they drive past this property on the way to work and, well, that looks quite cool. It's on a nice street, it's low maintenance. We'll buy it. And then they try and figure out what strategy aligns with that type of property. But what we really want to figure out, first of all, is what is the goal? And then what strategy aligns with trying to achieve that goal? For example, if your goal is about not having to turn up for work because you have a passive income rolling in that is essentially being able to pay you, your wage essentially, well, then we need to look at cash flow rich properties, potentially looking at multi-income properties. I'm going to show you a couple of them. Potentially looking at boarding houses where you get a little bit more income. If your strategy is, well, you want to buy a new car, well, then why don't we just get out there, do a trade, look to create the capital that you desire to go out there and buy the car that you're after. So again, coming back to it, first of all, what is the strategies that's first going to get you, or best going to get you to that end goal that you're looking to achieve? Then the key element is looking at that strategy and what area relates to the strategy that you're looking to implement. For example, going into, well, yes, I want to do boarding houses, brilliant. And then you go and look to do boarding houses in a town or an area where there isn't a desire for boarding houses, i.e. there's no young professionals that are looking to for that shared space, or there's no student accommodation in that space. So the strategy really needs to, again, relate to the type of area that you're going into, depending, again, on what goal you're looking to achieve. And then last of all, it comes the deal. So now you've established, right, what do I want to achieve through property? What is going to be a strategy that's going to be able to implement to get me to that goal? What area is going to relate back to this type of strategy that I'm looking to implement? And then lastly, what deal or what type of property am I buying in that area to implement on that strategy? And if you follow these principles, then it will give you the ability to achieve those goals that you're looking to achieve through your property investment. Who here has heard of this SAD principle? I'd love to hear it in the chat again. Roger, yes, I know, Roger Bolam. Brilliant, nice to have you on, Roger. Brilliant. If you've heard of it before, I'd love to hear from you, or let me know what your thoughts are. Again, I'm getting you guys on the chat, making you work for your money on a Wednesday evening, aren't I? The next thing I'd like to share with you guys is the investment strategy pyramid. So this here basically looks at the levels of investment types depending on, I guess, where you're at within your investment process. So for everybody, they come in or they look at a different strategy to implement in order to, again, achieve those goals. And the first level and the most simple level in terms of strategy, in terms of a property strategy, is buying your own home. Now, this might not necessarily be the best in terms of looking to achieve your goal, but it may be more of an emotional purchase because that feels the comfort. Again, I'm coming to you today from my home in Auckland. It's an element that is part of my strategy, is to own a home. But for many of my team, they feel that they are better off investing and creating income with that capital and then rent where they want to live. But again, it comes back down to the goal. What is the ultimate goal and what are you looking to achieve from it? But owning a home really is the fundamental. And one thing to consider, if you have owned a home in the last year, 2 years, 3 years within New Zealand, we've seen some pretty phenomenal growth. And again, for you Aussies as well, pretty phenomenal growth. I mean, we've seen probably 10 to 20% in the last year in terms of growth. What this has done is it has given you the ability to start to climb the pyramid. What I mean by that is, by the growth that you've had within your properties, it's created equity. This equity that is created by the increase in value on your property is giving you the ability to use that equity to actually start buying investment properties. The leverage of equity is such a powerful, powerful tool. And I'll talk a little bit more about it when I show you this first strategy in the buy and hold pyramid. Next one up, flipping. Love flipping. It's a big part of my first initial strategy. Turning properties over, making a profit. It's brilliant to have as part of your strategy if that is going to suit, again, the goal. Multi-income properties, I'm going to show you some of those. And last, the top of the pyramid, developments. Absolutely epic when you can get up and climb the pyramid up the developments, but it might not be for everybody. And that again comes back down to what it is that you're looking to achieve. All these strategies are elements that we actually cover off on our 3-day cash flow masterclass and have experts deliver information on all the different elements of these strategies as we go through. Now, like I showed you down the bottom, we have the buy and hold. Really, buy and hold is the foundation when it comes to property investing. It really is the foundation. It's basically the key principle or the key element, basic element of any sort of investing. The concept of buying a property with the intention to hold it long term, with the ability to have income that well outweighs any of your expenses. This is the key principle in terms of cash flow. And I'm going to show you this deal here, which is going to implement or going to give you an idea as to how cash flow actually looks when you break it down and look at it from a holistic point of view. Because like I mentioned before, it's all about making sure that your income well outweighs your expenses. And here we go. In this example, I'll be able to show you that. So this property here that a client purchased, this deal was actually purchased in Rotorua and was purchased for $335,000. It does have a $5,000 reno, which is just a few little tidy ups and bringing it up to healthy home standards. This property here has a rent, which is bringing in $420 per week of $19.06 per month. Then we start to have a look at all the expenses associated to that property. First of all, interest. Interest is always going to be your biggest expense when you are leveraged up. What I mean by that, if you have the property with a loan attached to it and the loan is on the higher side of things, then you're going to have an interest attached to it. This property here is actually 100% leveraged. What that means is there's 100% lending against this property. How that was able to happen is this client actually used a deposit from their parents' equity. They're paying the loan against that parent's equity. Then they acquired a loan for the purchase, meaning they have 100% of lending. They're covering all the costs, which is there in that $472 per month. We've then got MO. MO actually stands for monthly operating expenses. This takes into account all your expenses in terms of your rates, your maintenance, and your insurance. So when we take our income, like I said before, income that well outweighs our expenses, and when we start to pull our expenses off, what we then end up with is cash flow. I mean, this property here for only $335,000 is putting $1,000 in the client's bank account every month, just by following a principle, which is buying properties that have high income compared to their expenses. Pretty cool, don't you think, to be able to buy a property that puts $1,000 in your bank account without actually having to get out of bed every day? Now, I know that a few of you are going, yeah, well, what about taxes? Because everybody loves to talk taxes. And don't worry, I will talk taxes later on. But I think the key element is to remember, before you worry about paying taxes, the first thing you need to do is actually earn some income. And you might think I'm crazy, but my goal every year is to pay as much tax as possible. Yep, I want to pay as much tax as possible, but it's about being tax efficient. Because if you are paying as much tax as possible, what that means is you are earning as much money as possible and still paying your taxes. You should be paying taxes. I mean, it's part of society, but you want to be tax efficient, and that's something that we will definitely cover off and make sure that you guys have a good handle on. I'd love to share with you guys Torb's portfolio. And I reached out to Torb today and I was like, Torb, give me some updated numbers, because these numbers are about 6 months ago. So we're probably looking at some really impressive numbers when we start to see when he's had some of the rents go up over a serious portfolio, as well as the growth that he has seen. Torb has built a portfolio from Adelaide. This portfolio is all in Gisborne. And I'd like you to can't get my words out. Pay special attention to how much is purchase price, including renovations that he's put into this deal. So deals. So this is over multiple properties. He has put in $3.5 million that has covered off all the purchases and the renos. He's now got an estimated value of his portfolio of around $6.5 million. That's $3 million of equity he's created. And he started his journey, his first purchase in just July 2018. You follow that principle again with buying properties that have high income relating to your expenses, and you end up with a cash flow of $151,000. I mean, for most people, that is more than they are earning from their salaries, and they are able to create that without having to get out of bed. And Torb, he reached out to me. I reached out to him today, and he was mentioning how he's off to Sweden in a couple of weeks to go spend some time over there, and then his plan is to come back and head over to New Zealand, because I know that he absolutely loves New Zealand, and I'm going to share with you exactly why he loves New Zealand very shortly. But this here is a look across Torb's portfolio. Pretty impressive, and I realize that it's probably a little bit small to see because there's a few numbers and a few deals in there, but it really is cool to see such a huge portfolio built by Torb. The key element, I think, for Torb is that he has been able to create this huge portfolio with using the ability to go high cash flow to avoid any serviceability issues. Because lending can get tougher if you're not buying the right type of property. If you were to go out there and buy, 1, 2, 3, 4, 5, 10, 11 properties that Torb has got there, without buying high cash flow properties, it's not going to be very long before you tapped out. We see this very common with clients that have come to us. They may have 1, 2, 3 properties, but they can't get any more because they haven't bought the right type of property or haven't structured themselves correctly to be able to keep buying and keep getting the next property on the ladder to be able to keep going. And this is why Torb was able to create a hell of a portfolio in such a short period of time. And like I mentioned before, Torb does love New Zealand. I got this email from Torb a couple of months ago. Obviously, when he was able to head over to New Zealand, and great news that everybody can head back here now. Very exciting times, and exciting times for the property market as well. But this email that Torb sent me through, he knows that I absolutely love my fly fishing, and he flicked through this email. There's one sentence I want you to pay special attention to, and that there is, "I can do this because of property investing and financial freedom. Thanks again for your great training and support." I literally get goosebumps when I tell that, because it's absolutely awesome to see what Torb has been able to achieve. And hey, pretty good chart that he's managed to get onto there. And I've promised him that next time he's over, we'll be doing a little bit of a wealth mentor trip and heading down to Turangi, I think, to get a couple of chart on the board. So really cool to see that buy and hold portfolio, that base level of the buy and hold on the investing pyramid. I'm going to take you through some of the other levels really, really shortly. But before I do, I'd just like to share with you, I have mentioned our cash flow masterclass. Now, this is our 3-day event that Wealth Mentor holds. It is going to be on offer for you guys later on today. I realize that you're here to learn about strategies in terms of creating wealth, and I'm going to take you through that for sure. But I'd just like to share with you that we do have this opportunity for you guys to join us on our cash flow masterclass. And to be honest, I've got a pretty crazy offer for you guys in terms of the price that we have in store for you guys later on. So make sure you hang around, and I'll give you some more details later on. Those dates, 18, 19, 20, you might as well write those down in preparation. Right. I mentioned before that I absolutely love trading. I think trading for me is a special place because it was a big part of my journey early on. It was a big part of how I was to be able to create the portfolio and be able to achieve the financial freedom in such a short period of time, because I used the profits from trading to be able to get out there and buy a fairly life-changing portfolio. So trading, like I said, has a pretty special place. I'm going to share this deal with you, which I think is pretty special, which was done by Chris. Sorry, cup a sip of my tea before I carry on. So Chris is from Auckland, and Chris actually did a couple of trades, and I love telling the story. He doesn't like it too much when I tell the story, but Chris did a couple of trades prior to attending his cash flow masterclass. He broke even on one of them, and he lost money on the other. And I can't wait to be able to show you what Chris has been able to do. Here's a couple of before and afters of this trade that he did just near One Tree Hill in Auckland. You can see it's quite a high-level trade. What I love about Chris is he's been able to take trading and make himself a professional property investor. Chris now has 2 teams that are constantly on the go at the same time, essentially meaning that 2 trades are constantly working for him. He has built up a really great team around him, is able to just roll deal into deal into deal, and has created a really great model. Like I said before, Chris is doing fairly high level renovations, but high level without overcapitalizing, because he understands within whatever market that he's going in to renovate or going in to work through, that he understands that he doesn't want to be going in and spending more than is required and start to hurt his profits. And this is the concept of overcapitalizing. On the masterclass, I actually spent an hour on trading. It's probably my favorite part of the weekend, where I get to talk for an hour. I'll talk through the different deals. I'll show you what it means to renovate to a certain level and how you want to be understanding the level of renovation that you're looking to do, to be able to make sure that your deals are creating the best possible profit for you at the end of the day. And profit, well, Chris certainly did make some profit there. And when you relate back to the principle, Sad, Chris has identified a strategy that really works for him. He's identified that taking properties that are what we call leakies or need to be recladded plaster homes, recladding those properties, renovating the inside to a high level, has given him the ability to create huge amounts of profit through his deals. I mean, look at that deal there that he's done. Purchased at 682, and he's made himself $440,000 of profit on one trade. Who wouldn't mind one of those to be done even once a year, once every 2 years? What about like Chris is doing, where he's literally able to roll deal after deal of deals like this? And this for Chris works. It's a strategy that is really powerful. And again, if your goal is to create capital and create a large chunk of cash, well, trading might be the best strategy for you to go down to be able to create that capital. You may then take that capital and leverage into buy and hold. Again, it all comes down to what the end goal is that you're looking to achieve. Pretty cool deal. Let me know your thoughts on that one, guys, in the chat. It's always great to hear when we show a deal like Chris has been able to do there. Now that there, yes, it's a high level deal. Here's one for you that's a little bit of a lower level trade to give you an idea as the level of what this trade would look like. You can see there, nothing special. This trade here was done in regional New Zealand in a town called Wanganui. And Matt did this trade here. The numbers, well, he's taken a property that he's purchased for $250,000 and he's managed to turn it around with a profit of $99,000. It's a shame he didn't get that extra $1,000 of profit, isn't it? It would be nice to hit the three figures, but really cool to see what Matt was able to do. Matt is actually another one from Adelaide, who's actually now relocated over to New Zealand because he is being so successful with his property investment journey. He's now moved on up the ladder and he's actually at the top of the pyramid doing a couple of developments. Really cool, actually. Matt has done over $10 million worth of deals. And you know how old Matt is? He's 23 years old. That is absolutely insane. 23 years old, and he has done over $10 million worth of deals since attending the Cashflow Masterclass. So that there, is a huge feel-good factor to see what Matt has been able to do once again at such a young age. Awesome. The next strategy, guys, that I'm going to share with you is multi-income. Now, multi-income is a great strategy to consider if you're looking to really go down the income route, because you can do 1-2 deals that are going to literally replace your salary. And this here is something you really want to consider. If it is that you hate that morning commute and you really want to just go in and do one deal that's going to start to be able to replace that income, something like this deal that Tim has been able to do may be something to consider. So Tim did this deal in Timaru. I'm not sure if he planned that because of his name, but anyway, Tim did this deal in Timaru, and you can see it's quite a substantial property that he's purchased there. It's pretty impressive size, but also I think the key elements when I look at what Tim has been able to achieve here is Tim was very smart about understanding his relationships. He worked on those relationships that he had in terms of his power team to be able to really create strong relationships and get this deal working to its maximum. And the numbers are really cool. Let's have a look at what the numbers were when he purchased the property. So these are the numbers at purchase. The property purchased at $640,000. It's a fairly substantial purchase for regional New Zealand, and he had quite a few purchase costs in there. So that there was his due diligence and making and the lawyer's fees and just getting that deal all settled up. $10,000 of purchase costs on this deal, and at purchase it had a weekly rent of just over $1,000. Again, we got the monthly operating expenses in there. So MO stands for monthly operating expenses. That's going to cover off, like I said before, your rates, your insurance, and also any maintenance issues that you may have through the deal. Mortgage on the property we have there, and spitting out $8,000 per year. Yeah, it's pretty average when you look at the numbers at purchase. But the key element for this one is that Tim was able to look at what the potential was with this property. The interesting thing about this property is that it was actually 6 separate units on 6 separate titles, which meant that it had a valuation to be able to be done on individual titles, giving him a much larger valuation on the actual property. The property at purchase actually had an evaluation of 1.080, so just over $1 million. That means that he literally made $440,000 when he purchased his property. Now, it's not $440,000 of cash, it's $440,000 of equity. And that equity is no good to you if you don't understand how to use it. Because essentially, when you kind of go down to your local dairy and go, hey, I'll grab that Coke, just chuck it on my equity. But if you understand and you have the right team members and you can start to use that equity, it gives you the ability to then move into the next deal and the next deal. Like we saw with Tor, being able to buy multiple properties in such a short period of time by creating the equity and then being able to leverage it. So this deal here, it did need some renos, and we got $135,000 of reno costs on there. You can see there, beautiful new roof gone on it, and it was a hell of a roof. But what that has done is it's driven the rent up on the property by bringing it up to standard, improving the level of the property, bringing in a tenant that is going to be looking to rent that property at that higher level as well, has given it an annual rent now of over $100,000. Tim also received a valuation post renovation, it's a bit of a mouthful anyway, of 1.255. So now the numbers are really starting to stack up, and this is a current deal. Tim literally got this valuation, it must have been only 3 or 4 weeks ago. So it's very fresh. It is just happening as we speak, where he's getting to the refinance and looking at the next deal to leverage out of this deal. Really, really cool. This property here is creating over $35,000 of cash flow. $35,000 of cash flow on one deal. That means that every year, without actually doing a thing, because we've accounted for all the maintenance and costs in terms of the numbers when you run your cash flow calculation, this property is literally putting $35,000 of cash flow in Tim's pocket each month. And again, I'm sure some of you are going, well, what about the tax? Don't worry, we'll talk tax in a second, but you got to earn the money first before you worry about paying the tax. And again, then, as well as that, we've got this great income associated with the property, which is brilliant. But Tim's strategy is not to be able to buy one property and stop. Tim's strategy is all about being able to leverage equity that he creates to then go and buy another property. And he's created $470,000 of equity. We're going to show you during the masterclass how you actually take that equity and what you can then leverage and how much you can then go and buy and how that works in terms of the concept of leveraging equity and buying more and more and more when you have the ability to have that equity there. Now, not everybody wants to go out there and buy 10, 15 properties. For some people, it's literally about getting out there and being able to add 2 or 3 properties to their portfolio, because that there is life-changing. Again, it comes down to the strategy, and we'll work with you in terms of understanding the best strategy to get to your goals. Now, I did mention before Cash Flow Masterclass. I just want to give you guys the link now. So I might actually get the team, if it's cool, drop the link in the chat. Head over there, guys. And if you're keen and you want to see the ridiculous offer, there's a little section there where you can put in a discount code. Put in strategy 22 and see what happens. This is just a little bit of a trick for you to jump in there nice and early if you're keen to jump on those nice early adopters. But make sure you hang around, because I need to show you this section on developments. Because like I showed you at the start, it's about climbing the pyramid. It's about starting at where you want to get to and understanding the goals. These here are deals done by a lovely couple, Zhao and Andrew, from Australia, from Brisbane. Now, Zhao and Andrew decided to buy a school. The irony of educating people on investment to go out there and buy a school. Anyway, Jono and Andrew jumped in there and bought this school, which is really, really cool. Check the purchase price. They bought a school in Chicago for $589,000. Their first stage of that deal was to subdivide the property. And what they were able to do is they were able to create 10 lots of using the field, as well as that getting 7 income producing boarding houses on the property. By the time they did the school, they had done a couple of deals already. They had 5 deals under the belt since doing their masterclass, but they were able to jump in there and do this really, really cool deal. The school field, broken down into different lots, was actually able to be sold for $700,000. So again, let's run through those numbers. Purchased at $589, running the subdivision, and then sold the school field for $700,000. Essentially meaning that they literally have no money left in the deal after selling the school field. Really, really cool to see what they're able to do there. So let's then look at the stage 2 of this deal that Joe and Andrew were able to do. So the school now, even after selling off the land, has a value of $900,000. The value of that has valued up because now it's got that multiple income streams. What they've then done is they've looked at what their ability is with this deal to take things to the next level. So what they've done is they've got a development cost in order to bring it up to all these income streams, multiple properties, multiple boarding houses, giving them a development cost of, well, you can see there, 2.7 mil, plus a few financing and other costs. So this is approximate numbers because this is a current deal that is on the go as we speak. But this deal here has an annual cash flow of $120,000. So they've taken a school, bought it, been able to sell off the land associated to it. So it was sold off the field. They've then been able to take the remaining lot and create cash flow of $120,000 from it, plus value, once done the $2.7 million renovation on it, of, well, over $4.5 million. An absolute cracker. And Joe and Andrew's first deal was really cool, actually. And I'm going to go off track a little bit, but their first deal, actually, they had very little money. And what they actually did is they did a deal with no money down, where they incorporated with an angel investor and a builder, did a joint venture, and were able to pull together their first deal, which was really, really cool to see them grow through their investing journey. Have a look at their journey that they've gone through. I mentioned before that we have students investing in multiple different countries. Well, here you can see Zhao and Andrew are actually investing in 5 different countries. They're investing currently in Canada, the US, Germany, New Zealand, and Australia. Pretty cool to see what they've been able to achieve. And again, the masterclass was their first step in joining in getting into property investment. So they attended their cash from masterclass only 4 years ago. Like I mentioned before, their first deal was a no money down deal, which was absolutely epic, which they made themselves $67,000. The small fee in terms of, and like I said before, it is really epic offer that we do have in terms of the cash from masterclass. Really is a minimal amount in terms of what they've been able to do with their first money down deal. They've done 22 deals last year. 22 deals in 2021, all across 5 different countries. And they're not just small deals. We're talking deals up to $21 million. John and Andrew, absolutely epic. I love to see what they're achieving. They're a big part of our family, and really, really proud of all that they are achieving through their investing. Pretty epic. Let me know in the chat what you think of that. If you don't think that's epic, well, I'm not sure. I think I'm super proud of what they are achieving, and it's so cool to see what all our students are getting out there and achieving. Now, I know that many of you guys are going, well, Jono, what about tax? Hey, everybody loves talking tax, and we've had some tax changes over the last while, and this is something that we will cover off on the Cash on Masterclass. We actually spend an hour on tax where I bring in a tax expert and we talk about any of the changes and structures and what's best for you guys in terms of investing. But I think the key element when it comes to taxes is understanding markets that are going to give you the tax efficiency. And I just wanted to compare New Zealand and Australia for a second. I'm sorry for all you Aussies for doing this. But when you look at the tax system in New Zealand, yes, we've had some changes recently, but the tax system really does have a nice simplicity around it. Essentially, all we've got in New Zealand is an income tax and a GST. Yes, there's some other elements around it, but we can work through that and make sure that you guys understand that. Australia, I mean, look at them. Income tax, GST, land tax, capital gains, wealth tax, inheritance tax, stamp duty, gift duty. Oh, so many. I feel sorry for you Aussies. But at the end of the day, it's about picking markets where you can be tax efficient. It's also about understanding what's the best way to structure yourself in terms of what entities you're buying in. Again, coming back to what I talked about earlier in terms of SAD, what is your strategy? because the type of strategy is going to determine how you structure yourself to be the most tax efficient, as well as make sure that you are growing and keeping yourself safe through your investing. And we will cover that off at the Cash Flow Masterclass. Whew, another sip of tea, I think, before I carry on, because I've got so much I wanted to share with you guys, and I realized that I do have now. So quick sip of tea, and then get right back into it. This here is the key principle, really. When you're buying the properties that are high cash flow, it's about buying the property, adding value or adding perceived value. Buying below value, adding perceived value is going to create you an equity gain. That equity gain that you create then gives you the ability to one of two things. In Chris's case, you go and you sell the property and you make a profit. You give yourself that ability to create this profitable trading business and the income that you're looking to do. In terms of, for example, Tim's case, where he's taking the equity and he's then leveraging, revalue, refinance, and leverage into his next property. So that there is the two principles that you want to think about in terms of once you have bought below value, added value, and created equity. And I guess this is a little bit of an interesting one, because at the end of the day, your whole strategy should be based around buying properties as though they never increase in value. How's that? I mean, yes, you're going to get growth. So, growth is a natural byproduct through inflation and through market movement. We've seen property double in value in the last 7 to 10 years, over the last 200 years. Well, it's gone a little bit more than that recently, but hey, there is always going to be some growth through natural inflation. But if you buy the property with the intention of never needing the property increase in value because you've created the equity, that there is going to keep you safe because you've got the cash flow attached to it. So then in terms of that, you might go, okay, well, what type of ways can we add value? And luckily, here's something I prepared earlier for you in 10 ways that you can use to add value to your portfolios. First of all, cosmetic renovations, nice and simple, get in there. And I like to call it lipstick on a pig. Get in there, tidy it up, make it look nice and pretty. The next one is structural, where we look to maybe change the layout a bit, look to make extra bedrooms by how we do the layout, maybe opening up some walls to have more of an open plan element. The next way, we can go out there and we can extend the property, add on a wing to the property, add bedrooms to the property. That there is another great way to add a value to your property. As well as that, what about conversions? What about taking garages and converting them into other dwellings? What about the ability to, there's even some really well-built sheds that you may convert. I'm not saying that they're going, look, because some sheds are terrible and you definitely wouldn't want to convert them, but some might be. Often garages are a great option. There is some elements that you need to obviously cover off with council and in terms of bringing it up to code, but those are certainly ways that you can look to add value to a property. Another way is a change of the title, potentially taking a property that is a cross lease and turning it into a freehold, potentially taking a property that's a lease option or a leasehold and maybe making a freehold. There's ways that you can do that. Definitely want to consider what the title of the property is in terms of how the value sits of that property. Again, another great way to add value. As well as that, subdivisions or adding dwellings, they kind of come one in the same. Adding dwellings to property, so we might be talking like a minor dwelling. I know you Aussies call them granny flats. Minor dwellings, we're talking up to 60 square meters. Often if you don't have the ability to subdivide, you can get resource consent in that dwelling. Again, adding huge income. It might even be just adding a 10 square meter dwelling on the property, which in the regions you can probably add, like, we're talking 100 even more dollars per week, and you can get them for about $10,000. So they certainly are a great option as well in terms of driving your yield up and your cash flow. You may look to buy a property, create a resource consent or get a resource consent for a development and sell it onto a developer. Again, adding value to a property, changing the usage of the property, the way that the property is, potentially going from a commercial to a residential. I think commercial or residential is a really great option currently because, well, we currently see that commercial spaces are sitting empty. When you just walk down Parnell Road right now, it's quite sad to see how many commercial buildings are sitting empty. Conversion to residential, because we know that there's a huge shortage of residential property in New Zealand. I was talking to someone today, is the president of the Master Builders Association, and he told me that the stats are still the same: 100,000 houses short in New Zealand. So the change of usage from commercial to residential might be a really great option to consider. And the last one, and this is a really interesting one, especially for us Kiwis, is market rent, because we're also damn nice that we're just like, oh, nice tenants. But at the end of the day, we are providing a great property. We are taking properties and creating a really a product that we're proud of, and we should be charging market rent for that property. It's only fair for both us and the tenants, and the property managers as well. Their percentage is also affected by it, so we really want to be looking at market value, and that also will also increase the value of the property for sure. Oh, a couple of ways to add value there for sure. Great. Next one I would like to talk you through is a quote that I came up with. And I think it's so true in the current format where we have the ability to potentially add so much equity or add so much growth. But buying off the plan may be a good option for you. At Wealth Mentor, we do not sell you property. I promise you that we will not sell your property. We're purely education. And if buying off the plan is the best element for you, we may suggest that. It's very unlikely in most cases, but it may be from a tax benefits point of view. But don't just buy off the plan, create a plan to ensure that you're getting out there and buying the right type of property. But it all comes down, again, to planning and working backwards. What is your goal? What are you looking to achieve? And what's the best strategy and way to implement those property investment strategies to get you to that goal? The last thing that I mentioned is you need to have a look at expanding your knowledge. And that is something I think that I truly believe in, because that has been a life-changing moment for me, is going in there and expanding my knowledge and growing as an investor and feeding off networks that are growing and becoming the best version of myself. There's an interesting stat. 75% of the top 100 rich lists have made their wealth through property or property businesses. And Wealth Mentor, we're very proud of everything that we have achieved with educating thousands and thousands of students by following principles, the Rich Dad principles, which has seen many of our students achieve financial freedom in such a short period of time. I showed you that with Torb. Really cool to see what he was able to achieve. Those dates again, like we mentioned before, for those of you that are interested in the Cash Flow Masterclass, that link will be in the chat once again for you. Thanks team for dropping that, appreciate it. 18, 19, 20th of March, that there is going to be absolutely epic. Let me take you through what we could expect from each day. First of all, day one. Day one is really where we jump into the foundations of property. It's really about where we understand the fundamentals of what it is to be investing in property. We make sure that you understand numbers. We make sure that you have the mindset and the shift into what it is that you're looking to achieve. As well as that, we talk through buying rules, because to be able to create a strategy, you need to have buying rules attached to it, so you understand what type of property you're looking to buy to ensure, again, that the deal stacks up, and there needs to be some rules attached to that. So really, really important. I mean, today I've scratched the surface on numbers, but again, we'll touch a lot on numbers and deal analysis and how you actually make sure that the deal stacks up for you. So make sure that you guys walk away from the masterclass really understanding how to run your calculations on your property investment. Quick quote here from Sarah. While you guys are filling out those forms, don't forget, guys, the link, the code there is strategy 22. Don't forget to pop that in there and see the ridiculous price that we have for you guys today. Day two, creating the wealth. This is where we get into a few of the different strategies as well. We start to look at boarding houses, multiple income strategies. We go through in a lot of detail to understand the fundamentals, the rules attached to some of these different strategies. But also, like I mentioned earlier, I get to spend an hour on trading, where I get to take you guys through how the best way to look at trading and make sure you get the best for your properties. We play something on the Saturday morning, and I know my team absolutely loves it. We play something called the property cash flow game on Saturday morning. It's a real life game. It's all go. It's action packed. This is all done virtually. We've got it pretty down packed from a virtual standpoint. It is a lot of fun where you guys will get some real great learnings out of it. And certainly is a lot of fun absolutely recommend that Saturday morning session. That is really a great way to jump into it. Like I mentioned before, we'll touch on different elements. We'll talk through finance, how you fund the deals, the lending, and all the different elements. Day three is a lot of fun as well. Day three, we end up jumping into the concept of building your business. So taking the concept of, well, now we want to be investing like a professional. So we need to make sure we're investing and building our business. So we go through a few different elements in terms of the development strategy. We actually have Paul Southey come in, an absolute legend of a man. I'll talk about him in a second, talking through developments. I bring in a tax specialist to talk through taxes. I interview them. We spend an hour talking taxes. Oh, who doesn't love that? I mean, I think the tax section alone, for the money that you spend to join us on the Cash Flow Masterclass, will pay for it tenfold. The tax section alone, on understanding some of the fundamentals and making sure that you have a solid plan. As well as that, I actually should have mentioned that before, on day two, we run through a one-on-one strategy session as well. We'll get you guys with one of the mentors to work through your strategy and understand exactly what it is that you're looking to achieve. Your session, just you and the mentor, to work through exactly how you can achieve those financial goals. Again, a great little quote there from James. I can do so much more with my time. The overall content was amazing and really has made a difference in my mindset. I absolutely love that. Here is a couple of team members that we have presenting at the Cash Flow Masterclass. They really are a great team of various knowledge, coming from different backgrounds as well, and a few different nationalities as well. We got Therese from Norway. We got Kyron, who from Bay of Islands. We've got myself, well, South African Kiwi now. Belinda, who's actually Australian born, built her portfolio from Perth, is now doing deals all through New Zealand and Australia. And Paul Southey, who's based in Waiarapa. Paul's actually built over 700 homes. Absolutely insane what Paul has been able to do. And all this team will be there at the Cash Flow Masterclass for you guys. So really is an epic few days. Awesome. Another quick quote there from Dino. But before we do, let's move on and talk a little bit about what you can expect from the 3 days. Like I mentioned, you've got a hell of a team there. We have a one-on-one strategy session, which is just for you, where you jump into your personal strategy, your personal goals, and what you are looking to achieve. You can connect and network with the team. There is an amazing group of different investors that you get to jump into breakout rooms with, network with, and be able to ensure that you are growing that epic network. 3 days totally dedicated to your investing and your wealth building strategies. Right, here is the offer that we do have for you guys. Like I mentioned, you get a one-on-one strategy session. This is epic. This is a time just for you and your mentor. You get to work through that. That's absolutely free included, as well as that online portal included in it as well. Lifetime event support. If you, after the event, need any support from us in terms of deals that you have currently going on, you let us know and we will be there to support you through that, as well as that workbook and a strategy call, which you have leading up to it. So as soon as you guys book in, and join us tonight, you will get a link to book that strategy call. And we usually offer this at $14.97, but like I said, today it really is a special offer. First of all, the ticket includes for you and a friend as well, so don't worry about it. Your friend gets to join you at no extra charge. So the price today is actually for 2 tickets. Right, like I mentioned before, really do have an epic offer for you guys. Remember to use the discount code strategy22 for 2 tickets at only $195 today. It really is a crazy offer. I mean, at $195, I don't see how you could not take up this offer. And on top of that, I'm going to add one more thing, which I think should make this an absolute no-brainer for you guys, is that if you get to Saturday lunchtime and you're not happy with what value you have got out of the Cash Flow Masterclass, we will refund you your money. We will absolutely refund your money. No questions asked. We will be there to refund that, as I have complete and utter confidence in the value that you will get from the team at the Cash Flow Masterclass. There's a saying that I absolutely love. And price is what you pay, value is what you get. And I know that the 3 days at the Cash Flow Masterclass is absolutely going to change your life. Again, that strategy, that code, strategy 22. Sorry, there's a bit of a typo there, guys. Make sure you use strategy 22, not strategy 2022. That is completely my fault on that one. Strategy 22, that'll get you that price at only $195. That code there will be valid until midnight tonight. So make sure you get in there and get that done ASAP to ensure that you get that really, really sensational price, only $195. Like I mentioned before, you need to act right now to claim your place. So decide which path you're going to take. Are you going to carry on doing what you've always done, do nothing, or is it time to take action? Time to join us at the Cash Flow Masterclass, invest in yourself, and look to grow so we can start to change those results and start to get that financial future that you guys absolutely deserve. Guys, it's been an absolute pleasure. Like I mentioned before, make sure you take action. Your time is now. We've made it. You've spent an hour with Jono. I've taken you guys through the strategies. Join us on the 3-day masterclass. We will go in depth on all these elements. You will get to spend time with our team. It really is an epic 3 days. I can't talk highly enough about it. The reviews talk for themselves. Make sure you click on that link. Once again, it is in the chat. Don't miss it. It is going to be open for you guys. But it's, once again, thank you very much for joining us tonight. It's been a lot of fun. I've enjoyed it. I hope you got a lot out of it. And most importantly, make sure you guys always stay awesome. Good night, everybody.